Hello, hello. Okay. Hello there, guys. Sorry about that. Just had a few technical errors on the microphone, namely that we didn't have the microphone assigned to the right one. But anyway, we're back. Thank you very much for joining. Welcome to Block Party Trading Analysis, live trading, and general chit-chat about news. Now, usually I will be doing some live trading. I've not done any live trading at all today. Obviously, because look at Bitcoin, it's going absolutely crazy. And the reason behind this, guys and girls, is because the CPI data has just dropped, the month-on-month, year-on-year. And this is actually pretty big news in regards to news that's coming out of the Fed, because it has massive impacts, not just on the market, but specifically on crypto. And generally what we want to see is, I'm not going to get too boring about it all. You can head on over to cryptocraft.com. They've got an awesome website, and they'll tell you all about it, and also why do traders care. So in a bit of a nutshell, why do traders care? Consumer prices accounts for a majority of overall inflation. Inflation is important because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. So what is the usual effect? Well, actual less than forecast is good for crypto. And as we can see right here, we came out at 4.9% and the forecast was at 5%. Less is good for crypto. And lo and behold, if we take a look at the price, we can see it has massively pumped. Generally these news drops happen around about 1:30 p.m. UTC +1 or 12:30 UTC. Either way, make sure you know what time that's going to be for your own time zone, and try to be a bit proactive and not trade too heavily into it. Now, it is not so bad when you're doing kind of swing trades and whatnot, because you've got a much bigger target, much bigger stop loss, should I say, and targets, conversely. But when you're scalping and stuff like that, it can be a little bit risky. That being said, let's review what scalping trades I would have taken today had we have been trading. So as we can take a look at the chart, this is the 3-minute chart, and I'm using the Block Party Indicator version 1.2. Yes, we did do a couple of little updates today, which was another reason why I wasn't trading, because I was spending a little bit of time just developing and tidying this up. Very small updates, none that will actually impact you whatsoever, really. I've kind of reduced it down so that some of the signals aren't so overlapping anymore, because they become a little bit intense, to say the least, at times. And I think, the reality of trading is, whilst you can take all the signals, absolutely, as I've proved on these live streams, they can get a little bit overlapping and complex. And I think for a lot of traders out there, you don't necessarily need as many signals in order to make as much profit. In fact, quite the opposite. You can make just as much profit with far fewer signals, providing that they are good signals, which these are. So had I have jumped on trading, we wouldn't have started trading at 20 to 3 in the morning. No, we would have started probably more around about a 7, 8-ish in the morning. So here, for example, is quite a good place to be taking a trade. As we can see, this is coming up to 7 o'clock. So I would have been online usually around about 7 o'clock to take this trade. And as we can see, this trade would have been a winner. Now, what is pretty cool is these little positions boxes you see here. I have not drawn them on already. This is all part of the indicator. So as a signal comes up, so do these position boxes, which is super handy so you can set the trade up really, really quick. And so if we'd have taken this trade, as we can see right here, our take profit was, whoopsie daisy. Our take profit would have been, we'll get there eventually, there we go. Our take profit would have been just here on this candle. And since we trade 10%, as always, in fact, let's put this just here so we can see the CryptoCraft. It's quite nice, and you can see that in the camera. So we'd have taken profit just on this candle right here. So that would have been 10% up. Then we have the next trade. So generally, we do advise putting your stop loss a little bit lower. than what is advised. Kind of, I'm not talking like a crazy amount, 0.1%, or if we're really, really kind of small target, 0.05%, and it gives just a little bit of breathing space. We would have got away with it just here, fortunately. So as you can see, our stop loss would have been down here, and we would have just missed this wick, which is quite nice. Quite opposite to yesterday, where I felt like I was just getting wicked out left, right, and center. A real frustrating trading day yesterday, but we're going to leave yesterday in where it belongs, in yesterday. So that's 2 wins on the bounce today so far, and that takes us up to 20. Well, we know that that's going to go on to win because it would take profit just about there. Unfortunately, this next trade would have been a loss, and then the fourth and final trade of, I'm not saying final trade of today, but the latest trade of today would have been a winner as well. So 3 wins, 1 loss, doing 10% per risk per trade. That would have taken us to a nice, healthy 20% so far. And to be quite honest, I would have put the tools down at this stage and been quite happy with 20% profit, especially going into the CPI data, because it is so volatile. So let's take a little look at the CPI data. And don't worry, I'll be back to live trading tomorrow because it is great fun. And I like doing it. And also I've got these nice, lovely new, not new signals, but kind of realigned signals, I guess is the best way to put it, which I'm really, really excited about trading in a more real life scenario because it is far less intense. If you've watched any of the previous live streams, you can see it does get a little bit frantic when they start coming back to back. And, I guess the downside and also upside as well in that case is that it can overcommit a little bit in one direction. And this is what we saw a bit yesterday. We got overcommitted in one direction, and because of the sheer volatility of the market, it was going both ways, swinging left, right, and center. It just took out what should have really been 3 trades. It turned it into about 9 trades kind of thing. So it was sadly, not a great day, but like I say, this is part and parcel of trading. You've just got to pick yourself up and continue to believe in the strategy. Up until like 15 days of trading with it, I've had 2 days of losses. So yeah, I'm not going to let 1 day of losses shake me on that one at all. Like I said, I'm actually really excited to get back into trading with these new kind of more nicer refined signals. And yeah, very exciting. As you can see, I'd be up 20% today so far. But let's take a look at the CPI data. And we took a quick look at what it means and why it's kind of important, and we've got to be respectful of it because whichever way you look at it, the US is still kind of the leading market in regards to economy globally. Certainly the dollar is anyway, but for how much longer, I don't know. But what that means as well is when we do get these big inflation data coming out, jobs reports and so on, it does have this domino effect pretty much on all markets because it dictates, is money going to go into the dollar or is it going to go into store of value such as gold and stuff, and even into crypto? So yes, we do have to pay attention to it. Now, what I've learned in the past, unless it is horrendously significantly different, so let's say we came out with 4% instead of 4.9%, then yeah, that's game changer at the time. That is huge changer. That is like market direction changing values, but we didn't see that. We saw 0.1%, which is still, good, big, in whichever way you look at it. But is it going to dramatically change the direction of the market mid to long term? Probably not, to be honest. I think this is going to be a short to maximum midterm kind of impact on it. And as you can see from, I think it was about, well, when I did this was on the 2nd of May, and we're now on the 10th of May. So, this was over a week ago, this analysis. We've left it on here. And I still stick by this. We had a double top here, and we've got this descending trend line. And what we were looking for here is to see what was going to happen around about this point. Now, we did bounce off this longer term trend line, as we can see drawn on here, and it respected it. So this isn't just a kind of make-believe line. We can clearly see that we respected it. However, what has happened is we kind of built up a bit of an ascending triangle formation. And what an ascending triangle formation is something like get my little poly, what's it called? It's my poly tool. Hey, I want some shading in there so you guys can see it a little better. There we go. This is my favorite tool, Polyline. Let's get it down here. So this is kind of a one tool fits all. So you don't have to use triangles, or the only other one that I do use similar to it is the parallel channels, which I've spoken about a lot before. Let's increase these so you can actually see the lines. There we go. Yeah, these are great. So I use these mainly for like support and resistance and stuff. So we saw this descending, I guess that's kind of a symmetrical triangle pattern coming to the end. And what we're looking for realistically at this point is now the consolidation point and then a breakout. And we see the breakout occur here. Granted, this was around about over the weekend period where we saw, that Binance FUD, which we spoke about it somewhat yesterday in $4.4 billion. I think it was around about 160,000 Bitcoin that was moved, which was the largest amount that's been moved, I think, ever. But the reality was it was all internal, so it wasn't actually in any way market moving. It raised more questions about why they were moving it, to be honest, but the reality was a lot of people thought it was an outflow, so panicked, FUD, and what happens here is when you see a significant dump like this, a lot of leveraged longs kind of go to shit, and then this causes this domino effect, and more longs go to shit. Surprise, surprise, with then 8% down, which is not good. But we're also seeing something which is giving us the willies a little bit at Block Party Towers, and that is we are seeing a significant move around the rest of the market when we see a pretty minor move within Bitcoin. And this was reminiscent of kind of periods last year, which was very shaky, like consumer confidence or customer confidence, or retail confidence. And that basically means that when Bitcoin dumps, then exponentially other stuff's going to move more. So we don't like this because it puts a lot of our stop losses at risk, unnecessarily as well. When it's following conventional trading analysis and stuff like that, usually you can be pretty accurate with your stop losses, and not necessarily it's going to work all the time, but within reason, it should abide by some degree of market structure. However, when you get a lot more extreme movement being caused because of Bitcoin, it means that you get a lot more wick hunted, to be honest, which is not ideal. So yeah, so it's given us the willies a little bit, but not enough to completely stop trading. We're not seeing any kind of crazy FUD. If more stuff comes out about Binance, or if there is, I guess, some legitimacy in them not having a complete kind of proof, or they've got the proof of reserves out, but whether they can actually go one-to-one with what they've got, or that becomes further in question, then yeah, we just got to be a little bit conscious of that. Now, to be honest, a lot of people are saying we're probably going to go up to high 30s, maybe in 40K before we see a retrace. I'm kind of the inverse, to be honest. I do feel we are going to head down to $25,000-ish region before we head up again. And this analysis is kind of singing true because we broke down on this significant trend line. We do have a strong, we've got a short alert coming up. We'll check that out in a second. We do have a good support there. I'm not going to lie, that is a pretty decent support we've got right here at 27,000. That could be pretty tough to break. And if we do, then I am so certain that we'll go down to 25K at least. And again, filling this untested weekly pivot here. Please, guys, don't sleep on untested weekly pivots. They are so strong. Yes, you can make a living out of them. They're so good. But yes, they don't get filled 100% of the time. Nothing works 100% of the time, but they do work a damn lot of the time. So for very kind of chilled, passive traders, I love working with them. And what's great as well is a lot of kind of how our signal sets work. They seem to they line up with them a lot as well, so they give us a nice confluence there. That's why we don't exclusively trade them, because a lot of our actual signals line up with them anyway, so we don't need to start confusing and muddying the waters in having to signal sets. And the way that our signals and trading generally works is we have our kind of, the match or the spark that lights the fire. And that always comes in our indicator signal right here, right here. I mean, to be quite honest, yes, you can just trade them straight out the box. But what we generally do is we'll get a whole bunch of signals. So let's, have a look at, these alerts here kind of thing. So we'll see that, here's not a great example, but say it's 7 a.m. this morning. We got 1, 2, 3, 4, 5, 6 signals. How do you decide which signal you're going to put out? Like as a provider, are you going to trade all of them? Yeah, sure you could. I mean, providing that your risk management's there and you're trading, let's say, I don't know, like 0.2% per trade, and your general kind of like target is about 1% risk. But you've got to remember as well that when you're trading, certainly in crypto, that you are at the mercy of Bitcoin. So it's not necessarily a great idea to be taking 5, 6 trades that are all short in one bounce or one retrace or one cycle. And that's kind of like, say, our 6-hour cycles, which is how often we get the alerts for the swings. It's not necessarily a great idea, because that basically means that if Bitcoin then pumps, there's a 99% chance, maybe not that high, maybe 95% chance of all of those shorts that you've just entered pumping as well. So the better way to generally do it is you trade on a more kind of time release basis. So every 6 hours, maybe you trade only once a day, it doesn't matter. But that gives the market enough time to get into its flow. Or, I've set up ETH alerts as well, which, spoiler, we'll start having a look at next few days or maybe next week. But yeah, so just bear that in mind, guys. Like, just because you get like 10 signals coming through, it's probably not always a good idea to take all 10. Maybe just take 1, even 2. But even when you do that, if you're taking 2, split your risk in half for those. So if you generally trade 1% per trade, but you take 2 longs on the same signal or same hour, same candle, then split that to 0.5% per trade. And then it just kind of spreads the bets a little bit. Sometimes it doesn't always abide by Bitcoin, but you'll generally see the correlation between Bitcoin and all the other assets, all the other alts, is very, very similar, unless you're Pepe coin. In that case, then it is just, well, I don't know. If you really hate rugs, don't worry about it, because they'll pull it. Hey, we don't know. I don't know. I don't really. I trade mechanically. I don't really trade news and all that kind of business. It's fine if you do. I mean, if you'd have managed to pull that off, I think it went about 1,000% or something crazy. Yeah, the SHIB wannabe. It's fine. But let's get back to Bitcoin. And what do we think it's doing? Well, if this had truly been a big market move, if this had truly been people behind it, I do believe that the price would have continued up. I know it's only been literally an hour since we released, but it has also been an hour since CPI data's been out, since New York's been up, since a good portion of money in America has kind of seen and been aware of this. I do think that this kind of, the interesting angle to look at this is that the price was dumped further in order to get a better price and an expectation of price going up higher on. However, I'm not too worried about this short. I do have a much longer term, bigger target long on Bitcoin. So this is kind of a little hedge within a longer term trade with Bitcoin. But, I can certainly see the price heading back up here. But I do think ultimately we are going to pop on back down to 25K, which is where we see the support for the 200 daily exponential moving average. This is where the untested weekly pivot will get filled. It's also where we start to see some price action again from a little bit further back. So by price action, you don't have to be right on the money of the top of the wick or the bottom of the wick. You can use volume profiles for this as well. It's really helpful. And volume profiles are great. I'm not going to get it up, but they're where you see the horizontal volume lines on the side here, and it gives you sometimes where it's a predefined fixed value, so you could do it from here to here, for instance, and it'll tell you what the volume profile is, i.e. the most traded price. And yeah, it is actually really good for spotting support and resistances. And I'm not saying you can do it by eye, but for the most part, you can, with enough experience, you can kind of gather what you're looking for by eye. I try not to, this is the absolute extent of how much I like on my chart. This is kind of borderline overkill, I think, for a lot of people. But the reality is, what do I have? I've got 3 moving averages, I've got weekly pivots, and then more or less everything else I've drawn is by me. There are some kind of automated trend lines on there, but quite few and far between. The rest of this mess is just everything I've drawn on. So we do see some price action starting to occur here, where we see the rejection there, then we see the breakout, pullback, and off we go. So for me, that lines up quite nicely with the 25K, which again is where I still think we're going. You know, I mean, watch this space. The CPI data could end up sending this upwards. It's one of, honestly, the reason why I'm kind of a bit bearish on this is one of the only things that's kind of driving the Bitcoin price at the moment. There's still a good bit of FUD around it, which I don't think is fully spent just yet. And that would perfectly align with that trend line heading down as well. So for the most part, providing you've got enough of a stop loss on bigger trades and stuff like that, you should be okay. Like I'm talking about if you're going long, then I wouldn't be like too fearful, to be honest. I don't think we're going to have a full market collapse. I mean, granted, it is, you know, it is still quite a considerable drop down to 10%. But if I'd have said, oh, I think we might be seeing 25K on Friday kind of thing, when we were just challenging for 30, you'd probably call me crazy. But, you know, here we are now. We've dropped, well, we saw about an 8% drop. We've bounced because of the CPI data, but we saw about an 8% drop in a couple of days. So it's not inconceivable to think that we might have another 8% drop down to 25K at all. So just be a little bit wary. We're not far off very close to a bearish divergence there, but not quite. We don't have any, I guess we kind of got a bit of a bullish divergence here. So yeah, we might see this kind of action track, a little pump up, nice load of people kind of get a false sense of hope and then come crashing down. But yeah, like I said, guys, you know, maybe if you are kind of considering trades and stuff like that, swings, make sure you've got a healthy stop loss on there. Don't overextend your risk. Certainly on the longs, like I said, but if you've got a healthy stop loss, then do it. Maybe approach it with a bit more of a cautious DCA method, or just lower your risk over the coming few days just to see what happens. This little rejection is not ideal. Let's just drop down to the 3 minute. Or flip over to 3 minute. But yeah, I mean, we could be seeing, we do have a short signal that's just fired. Whether that holds true, it could be quite a nice little trade to get into. It might blast through, but we're coming right up on the 20 daily exponential moving average. And let's take a little look at that. I mean, I have to say, I do think that is an untested weekly pivot there. I think I just totally missed that. Listen to me preaching about weekly pivots and then just completely missing them every time. So yeah, I think you could argue that, would you say that that is tested or not? So that is on Sunday. Yeah, I don't know. I don't know. I don't think that's tested. Okay, let's be way more granular actually. Let's go into 3 minutes. Shoot on back. Yeah, okay, no, I'd say, in fact, actually, yeah, that's, we've been testing this week pivot and we've been through it for not a short amount of time. So 7 hours into Monday, we were playing around on the week pivot. So that might not constitute as untested. But you know, I wish it was as clean and easy to read as that. But it's usually not. So yeah, if we can tidy all this up a little bit, what am I thinking for Bitcoin? Well, like I said, this analysis still rings true for me. We've broken down on this long-term upward trend line, which for me is kind of a big tell. We've got a couple of significant factors where I think we might be going down a bit further. The thing that is propping this up and then could absolutely destroy all this analysis is the CPI data. If a ton more people, as America comes online, really gets behind it, we could see this smashing on up. But the reality is we just dropped 8% and we're not even oversold. So at this point, if we check on back here, at this point, when it was around about the same place on the CVD, we did drop another nearly 8%, and we are right at the same place just there. So we could drop, I guess that's pumped a little bit. So yeah, we could head on down. Either way, we'd take profit on the short. So as soon as we take profit on the short, then I'm happy, and then we can pump back up to the moon. That's great. Otherwise, guys, thank you very much. It's a bit of a short one today. I just wanted to touch base on the CPI data and what that means, a bit of Bitcoin analysis, a quick recheck on some of the upgrades, or basically just patches to the indicator. And yeah, keep it safe out there, guys. We'll be back to resume the normal schedule at 12:30 UTC +1 tomorrow. And we also have some fun data coming out as well. So we'll make sure that we stay online for when that drops. Because it is the US core PPPI, and let's see what this means for you guys. So what we want to do is the change in price of finished goods and services sold by producers, excluding food and energy. So again, actual less than forecast is good for crypto. Right, so let's make sure we're online for that one tomorrow. Make sure you tune in and we can see how to navigate it. I'll probably get some trades out in the morning and we can reflect on them, but leading into it, I'll be a little bit cautious. However, it's a good indicator, so I might just kind of throw caution into the wind and see what it can do for me. All right, guys, well, thank you very much for watching, and I will